my zone. Let me into my zone. Please don't let me into my zone. 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 Please don't.
And we're back. Welcome back to Krown's Kiddo Cave on this very dark and gloomy morning over here from Helsinki, Finland. It is currently about 9 a.m. right now, and it is literally pitch black. So if you have any idea what that looks like, well, you can kind of see it in the camera right now. And today I've actually written out all of the things that I need to make sure that I do announce, because I keep on forgetting, because I am, well, because I'm a little bit unorganized usually. And first things first, I want to talk about the Krown trading application. If you are in the technical analysis program, the options program, or the jewel program, you're going to be getting the public beta access tomorrow on Monday, most likely, assuming that we don't have any like major fuck ups today. But so far so good. Everything's been on schedule, so very, very happy about that. For the rest of the general public, we won't be opening up the doors until likely middle of December is kind of where we're looking for. So this is just a beta for the people who are already in a program. And for the people who are already in a program, we're actually going to give you full access to all of the application's features, or at least the ones that are working right now, for the first month or so, just as like a thank you and to show us appreciation for being a part of this community and sticking with us. So what else do I want to say about the app? Yes, I think that's about it. If you do want to beta test it like right now today, we're still letting people in from the technical analysis program. Only if you can't just wait another day, but by tomorrow, yes. Again, that's going to be available for you. We're going to likely be sending emails out, so keep a lookout for that. They may end up in your spam folder just because these are newly created email accounts. So I think that's like one of the filters there. So keep an eye out for that. I'll obviously make an announcement as well. And again, this is all barring any sort of like major sort of an issue that that doesn't happen in the next 24 or so hours. So looking forward to that. And also want to talk about this. I haven't spoken about this at all recently. But the Krown trading app, is going to be accompanied by a new website. So my old website, I just did it by myself, which is not like impressive. It's not professional. It's not, anything. It's not easy on the eyes or anything like that. So we've actually gone through and with the help of a developer and a nice designer, we are working on a new website, which is also going to likely debut tomorrow. We're hopeful for that. Again, it's going to be kind of like the first iteration of it. So, as time goes on, we'll make changes here and there. But for right now, that's actually going to be the new hub for all of the Krown trading activity. Meaning, you can get the information on the apps over there. You can get all the social media stuff. You can get information on the programs. And actually going forwards here as well, if you are in the program already or any of the programs, on Teachable, you'll be able to access the program content on both Teachable. I'll keep that open for you. I'll still pay, of course, I'll still pay for that. And then also on the new website. So that's going to take a little bit more time, but over time, we're going to make sure that everyone, who's supposed to be in there gets in there. And so you just have another venue to watch the videos on. What else do I want to talk about? Yes, so that's hopefully coming tomorrow. Again, same thing kind of as the app. As long as there's not like any sort of major meltdown between now and tomorrow, Monday, that being that day, should be on schedule. What else do we want to talk about? Yes, okay, the crypto duel. Just had another crypto duel on Cointelegraph with Jacob Canfield, and definitely go check that out. I'll link to the video in the description of this current video. Or you can just head on over to their channel, as they do this thing quite frequently. So you might be interested in something like that. It would be cool, like if we got two people who aren't going to be mostly on the same sides of things. I have a lot of respect for Jacob Canfield as a trader. I think that he's skilled. I think that he's legitimate, and he verifies himself. More importantly, unlike most people on this space, it'd be great if we get someone else, who would be a lot easier to disagree with, just for a little bit of fun, talking shit. But for the most part, I have a lot of respect for Jacob Canfield, and really enjoyed meeting him, and really enjoyed bouncing ideas off each other. So we had a few disagreements here and there, but for the most part, very, very similar styles. So I wouldn't really expect like a huge argument or anything like that. In fact, I really actually want to have him on the channel here, and I want to kind of start a new interview type section. Because he has a really great story, and I want to bring forward these great stories, people going from rags to riches, because I think that that's incredibly inspiring. And you'll see that this is it's a very common story for a lot of professional traders, a lot of people who do this as a living. Typically there's some sort of initial success, then that success gets taken away, and then you have to rebuild from ground zero, learn whatever it was that that caused that first major meltdown, and then repeat the process again. And who knows, maybe that process happens multiple times over your life. I'm certainly very much I'm certainly very much an example of that. But I think just overall, there's incredible value to be gained by hearing people's real stories. So I'm gonna start to record like interviews like that. I don't know how long they're gonna be. I don't even know, what what it's gonna end up looking like. But hopefully sometime later this week we can get on a video and post it, by the weekend or whatever it ends up being. Again, so yeah, what else do we have? Oh, yes, this one's a big one. Jesus fucking Christ, man, the scammers are back. If you've been getting an email from what looks like my name, understand that first off, I'll probably never email you out of the blue, and I'll definitely, if I do email you out of the blue, I'll definitely not be asking you for money or for you to invest in some sort of like risk-free, bullshit. I think it's quite obvious that a lot of these emails are obvious scams, so I don't think that like they're really getting anyone. But if there is any sort of question mark with that, I can confirm right now, no, I'm not offering like some sort of like a private investment group or whatever weird opportunity that they're suggesting right now. And if you actually do look closely, the email that's associated with these accounts is not my actual name. And again, it would be coming from my personal email, which just makes very little sense. And I have enough shit to deal with on a daily basis to begin with that I'm not I'm not really going out of my way to email people that aren't already in contact with me. Again, not to sound arrogant, it's just there's too many fucking things to do in the day. So I'd actually like to reduce my load. And also I do ask that if we are going to have contact, email is really just not the best way, and I'd really appreciate it if email just was not even is just not even an option for most people. Just go through Discord. It's a lot easier to track all the messages on Discord, and I can promise you that I will get back to you on Discord, especially if it's serious matter. I understand that there's a lot of people just want to chat as well. That's completely cool. Just understand, it's never like my intention to ignore anyone. It's just things get fucking busy, and then I have to kind of like titrate my own energies because there's just only so many things that you can do in the day. And I also really want to start focusing on creating more and more content, and getting into sort of like conversations and whatnot. Kind of, is a distraction from that. So yeah, I think that's about it. I feel like there was one more thing that I wanted to mention, but fuck it. I think that's good enough for now. I also do have a link to that Cointelegraph interview, not just in the description of this video, but also in the Discord as well. So with all of that said, I think it's time to take a look at the app, but I would like to wish you the best, also the happiest on this very holy Sunday. Sunday, perhaps goat Jesus, bear Jesus, or bull Jesus, or all Jesuses. And there's probably gonna be someone who's very mad about that statement as well. Anyways, let's get into live stream right here. Whoops, hey, hold on, get on over here, app, there we are, and there she is, the app as it stands right now. Again, this is going to be going through multiple iterations. This is only the second one right here. It's still in alpha stage, not even beta. And what are we looking at? We still see open interest well over 1.1 billion, which is significant, which does tell us that a move is likely coming. And looking at the just trajectory of today being the weekly close, I think that we likely see a move somewhere around the weekly close, whether it be a few hours before, a few hours after. Posturing for that weekly close typically is had by by both sides. Both sides want to take control of the way that it looks, and kind of lining up all these things, not just looking at open interest but also volatility, which we don't have up here. We'll have to look at the actual charts for that. Things are really lining up for a sizable move. We kind of saw we've seen a sizable move this past week. It just doesn't really feel like that because it happens over multiple days, just like slowly but surely getting broken down. Anyways, total market cap taking another hit from yesterday, down to 234 billion. Remember, overall, I just want to point out to this is just like extremely small. It's extremely small. There are literally companies like companies that have a bigger market cap than the whole total market cap of cryptocurrencies, not just Bitcoin, but like every last little shitcoin included with Bitcoin on top of that. In fact, looking at the altcoin market cap, it's about 80 billion. So really Bitcoin making up the major bolus of this at around 150 billion. Again, still nothing, especially when we're talking about potentially a currency or a store of value like gold, which gold has over 7 trillion market cap. So at the end of the day, is this early? If you are looking at this as a legitimate technology, yes, absolutely, it's incredibly early. Anyways, getting about 2.65% shaved off, but 2.32% of that is coming from the altcoin market cap. So Bitcoin more or less flat over the last 24 hours since we last spoke. So the lower time frames, we're not really have too much new to talk about, although things are probably lining up with a little bit of a bouncy, like a small bouncy bounce. And then we'll kind of get into it after that. Altcoins making the majority of that. We did see a sharp downturn in the crypto fear and greed index, down to a 38. However, still not really at extremes, especially historically. We're not really at extremes to the downside until we're like in single digits. And we're not really in extremes to the upside until we're like above 90 read or even like an 85. And right now we're not really, not seeing anything obvious here. So yeah, just wanted to point out the open interest. Of course, everything else over here on the left-hand side is still under construction. Although the learn section obviously going to be working, altcoin section working for now, news section going to be working, and portfolio section going to be working. But we really want to get these guys up and running as well. And until then, it's something to be aware of, but not for now. Anyways, let's get into the actual charts themselves. And let's start off with the lower time frames today, just because, well, why not? Going over here to a 4 hour, are we seeing some bullish divergence being put in place? Actually, no. Actually, no. We do not have any bullish divergence here at all. In fact, we do have a little bit of hidden bearish divergence, but I don't really have a strong opinion on this. Bitcoin is more or less stepping down here in the way that I look at it. I don't really feel like Bitcoin has a major washout from this level to the downside, but lower time frames being beat up this much likely does offer up a little bit of a bouncy bounce, maybe likely retest kind of the area that we broke down from on the last move on Friday. It was on the 15th of November. That would be back around the 21 exponential moving average, just coming in from this area right here. If that area does get taken out to the upside, I'd look for another test of the 200 simple. I don't really have any reason to be short term or medium term looking for a bigger move to the upside, as long as we're below the 200 simple on the 4 hour, which is 8,700. This is going to be consistent with the 200 exponential moving average on the daily. So very, 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 very important level, especially from a daily perspective. And if we could get it back above there, I would look for a move actually above 9,000 to like 9050 to 9100 up towards this territory right here. But as you can see, that's a little bit well and far away. And with all major moving averages, even on the lower time frames, really taking on a more bearish posturing, I think it's more likely that we get like a small bounce and then probably continuation just a little bit lower to the downside of the range. I don't think that we have that much more downside here until we put in like a sizable bounce. Looking at historical volatility percentile, even on a 4 hour is crushed, and I'd imagine that the lower time frames below this guy are going to be trending down as well. Here's your 3 hour, here's your 2 hour, and here's your hourly, all on extremes essentially, or trending down. I'm sure a lot of people are looking at this as a bear flag. The problem with bear flags is that a lot of the time this turns into your BART flag, right? So, do I think that Bitcoin, do I think that Bitcoin could have a quick move back up and test around 8,700 and still get rejected and then carry on like a little bit more downside, maybe down to like 81, 8,200? Yeah, I'm kind of thinking in that vein. So yeah, looking at going back to 4 hour right here, we do see 4 hour Stokes up, very, very weak, but they are technically up, well within the bearish control zone, to be fair. 3 hour, same thing, they are up and gaining momentum now as well. 2 hour are going to be actually getting a little bit tired right at the neutral zone, but not a death sentence in and of itself, and also is not officially crossed. And hourly is actually having a fresh cross right now. Still playing along this trend line, which has been a really good sell area ever since like the 12th of November, funnily enough, coming in all the way back on over here, getting all these local highs, which is, usually I talk shit about the lower time frames, but hey, this one actually, fair enough, actually getting it pretty damn well. For me, I'm not saying that you can't trade the lower time frames, but that is a good example of, of some nice good scalp plays along the way. Anyways, going back down to it right on over here, RSI in all these time frames is for the most part bearish. Like I said, I don't even see there. I mean, there's no real bullish divergence to be had here because we're not even really making lower lows right here. So even coming off the low makes it difficult. I'm sure a lot of people are like looking at this point and this point. Well, that would actually be this point right here. So it doesn't really follow actually. So I'd have to disagree with a lot of that. There's no bullish divergence present on the 4 hour, maybe a 3 hour. I think we did see some yesterday on 3 hour. Yes, indeed we did. But we already tested the 21. So we did get that move up. We did get that test up to about 85.30. I'm happy to hold my shorts as long as we're being held by, especially the 3 hour 21. And let's see, what about the 2 hour? I mean, do we even have it here? Yeah, we did have a little bit coming off of this stretch right here, but we did have about a $200 move to the upside as well. So, it's very reasonable to expect that that's actually already played out. So I would really only look for the BART move to happen if we actually ticked above this high right here at about 85.40, 85.50, depending upon the exchange. So yes, Bitcoin's right around there. But Technically speaking, I'm always going to go with the overall dominant trend. And even on the lower time frames, the trend is the same as the higher time frames. It is down. Even if we go down to a fucking hourly, the trend is down. We're making lower lows and lower highs. So this is quite damning. However, because momentum oscillators are so beat up here, I do think it's possible that we get a BART back up. If we do get a BART up, I'd be looking for a move to about 8,700, and I would be told likely that we're going to get a BART if we move above this little prior high right here, which is again, let's put it like 85.40, 85.50ish region, depending upon the exchange. So if we even just tick back above there, don't even have to close above there, I'd probably be looking for that to play out a nice hunt to the upside at the very least. And who knows, maybe we do close above 8,700 on like a 4 hour, and then I'd look for another extension up to the $9,000 level most likely. We'll have to come back and reassess that one if it does happen. But for right now, that's essentially what I'd be thinking. As a trader, thinking down essentially. Problem is, I don't really think that we have like too much more downside here. Yes, we do have the 4-hour death cross, which was initiated on the 14th of November with the green 55 crossing below the purple 200 exponential moving average right here, tested beautifully right here, held below on this last little tick right here. We actually I believe that we saw this one on stream, which was quite nice. And in all major moving averages on a 4-hour turning into a bearish posturing, in fact, as we do have all lower periods trading below higher periods, save the 200 simple, but we're focusing on the exponentials right now, and I believe that this is shown on all time frames up to maybe a 6-hour. Yeah, 6-hour is in that posturing as well. What about an 8-hour? 8-hour is there as well, actually, as of yesterday. Okay, so there. What about a 10-hour? 10-hour starts to really matter too. 10 hours there as well, actually. Okay, this is getting. What about a 12-hour? Yeah, 12 hours not there, but all the way up to a 10-hour. So it's nasty here. Don't get me wrong. And of course, on the lower time frames, this has been so fucking technical on the drive down. I mean, it's not even, it's not really even a drive down. It's like a nice little walk down is what it is. Very, very orderly, very, very nice. And just in the most basic of basic ways, looking at it from here, I mean, we can just do it like this. Whoops, let me get the horizontals right here. With each and every support that's broken, that becomes your new resistance. So this guy right here gets broken, becomes your next resistance right here, retested, fails, blah, 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 blah. Same thing right here. We break below this guy right here, retest it, boom, resistance, and take your next step down. And then we use, basically the 200 simple right here as support for that, for that last move we break down. Where do we come up on that next little move to the upside? Well, right here, tested multiple times, but no close above, and then move down. And, literally same thing right here. We can do this the whole way through, and then more recently right here. So that's kind of where I am getting that 85.50ish number. As long as we're below there, I don't think that there's any like real threat of playing out a nasty, BART move to the upside. Let me just make sure that my microphone's on, looking like we're good, and nice. Okay, beautiful. So yeah, if we do move above there, I do think that we'd likely get a quick move to about 8,700 and then come back and reassess. And if we do get above 8,700 on a 4-hour total closing basis, very likely that we do move up to at least test 88.50. But personally speaking, I'd be looking for a move up to about 90.50 to 9100. However, for right now, as it is, because we have not taken out this level, I would still be looking further south. I am still holding a good amount of my short. I did close a great size of it right around about 83.50 and then 8400. So I'm still holding on to a little bit, but a good amount is closed right now. So I'd like to realize that. Also, looking at the daily right here, the reason why I actually do think that we get another move to the downside here before like a sizable bounce up. Meaning a sizable bounce up is not like that move to 8,700, by the way, is because, the higher timeframes and the lower timeframes, as we looked at already in the lower timeframes, are pretty beat up. The higher timeframes, kind of same thing here as well. Daily Stokes are pretty fucking down there, which historically speaking, they don't really stay down there for that long. Yeah, we do get signatures like this, but you can see that they are more so an outlier than what we typically get, like right here. Very, very quick moves once we get kind of deep in there, and then play out at the very least a nice little bounce. So I do think a big bounce for Bitcoin is coming. To me, I think likely around 8,200 to 8,000 low is where I'd kind of be angled towards. You do see the blue 3/7 exponential moving average coming in right around $8,000, and that is going to be consistent with the weekly. right here with the weekly 55, which has done a good job of holding up Bitcoin during this last little move to the downside right here. So we haven't broken it on this whole run up to the upside ever since, what was it, back in April of this current year. So again, if we come back down here, I'm very likely going to be a buyer. At the very least, I'll certainly be closing shorts anywhere below 8,200, for myself, and I'll probably try to catch a bounce somewhere in this region. We do have to be aware of this though on the weekly, and because this is Sunday, and because we are going to be focusing on higher time frames, longer term analysis, there's something pretty nasty going on right here. If we do close today anywhere below the 21, which is 89.50, so if we don't get a BART back up by end of day, before the weekly closes, which we've already seen the CMEs do this, or not have the BART, like they actually close below. This would make me very, 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 very convinced that we likely do see this like $8,000 or $7,900 tick right here. Again, I do think that we bounce from there, but coming into next week, I'd be looking for a move likely towards there, assuming that we don't get a BART back up above essentially 9,000 before end of day, and I don't think that that's likely to happen right here. We already saw CMEs close for the week, and they closed actually on their lows and made a new low below last week, and are actually below both the red 10 symbol and the yellow 21 exponential moving average. And we saw the same thing on GBTC as well, which closed on Friday too. So both of these guys already have their weekly set. In fact, the GBTC looking more nasty just because it's pushing off the 21 right there. It looks to me like it wants to pop back down to 945, and CME is going back to them right now. Yeah, actually they're kind of there already. I'd say probably down in this region here, which is about 8,000 to 8,100, and there's about $100 premium on these guys right now as well. So yeah, yes, the momentum oscillators on the weekly are pointed up right here. And that tells me that we likely, if we do come down to this region, it likely does get bought up for at least a decent bounce there, and then we'll come back and reassess it. But weekly RSI getting rejected in this region right here is not good. We likely do come down and test around the bearish control zone. And again, anytime that we've closed even below the 21 exponential moving average has not been good. Just as simple as that is. Even a fucking monkey can do that, of course. Looking at it historically, anytime that we've broken the 21 exponential moving average, the yellow moving average on the weekly, that has been met with the end of your up moves. And yes, we do kind of chop around it a little bit in the in the downwards consolidations during the bear markets, but we never really maintain it for too long. I mean, this is very this quarter, these like small stints above it in 2018, very reminiscent of kind of what we're doing right here. Spend 3 weeks above, struggle to maintain, and then once you lose it, back down to the low side of your range. And in my opinion, right now, the low side of the range is essentially this area right here, upper 7,000s, low 8,000s. So that's what I'd be looking for right now. Not only that, to add on to that, we have the red 10 simple, which is going to have a bearish cross with the yellow 21. Again, lower period cross below higher period. You intuitively know that to essentially tell you that the trend is down. From that perspective. Last signal that we got was right on over here in March 2018. Signal that we got before that was in this bull trap in July 2014, and signal that we got before that was this guy right here, and before that there was just not really enough history to kind of look at it. But even more important than that, just looking at the slopes of these two moving averages has been pretty damn good. Actually, even better, being a more leading indication, from for those major moves down. Just looking at when both these moving averages get a negative slope, that is typically when it's party overtime. So we both get a negative slope kind of right here. They flatten out for a second on the 21, and if we do close below the 21, we will get a negative slope on it on the resulting tick. Same thing right on over here. It basically told you not to be bullish anymore, right around about 13,500. Just like it told you to be bullish right here, right before the major move up, or right at the major move up. At the $5,000 level, so not bad in hindsight. And then same thing right on over here, gets this consolidation after the first major pop extremely well. Same thing right here to the downside. Same thing right here to the downside. Same thing right here to the downside. And before that, we don't really have too many examples, but those are all 70% plus retracements. So I'm not suggesting that Bitcoin's going to have a 70% retracement from this region right here, but I am suggesting that, this could get nasty. However, I would not be looking for like major downs, like a major meltdown, unless only if we close a weekly basically below this low right here, which is like 7,850, 7,900. So if we do close below there on a weekly closing basis, then yes, I will be that person talking about moves down into the lower 6,000s, upper 5,000s, longer term. But for right now, I think what's most likely to happen over the next 4 months to 6 months is we essentially range between about upper 7,000s and in mid 10,000s right here, and just fill out this range. It's going to be very, 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 very boring. It's going to be very reminiscent of this area right here, this area right here. And it's going to bore, it's just going to make people really fucking mad, most likely, because most people just want to see a major massive move to the upside or a major massive meltdown to the downside. And realistically, how are we going to get the most people to provide the most liquidity for the bigger accounts? Make them think that those big moves are happening so that everyone gets super bearish down here and everyone gets super bullish right here, right? And I was certainly guilty myself of being bullish up here, but I still kind of stand. I don't still kind of stand by that. I still stand by that. That was the right thing to do according to my strategy. Of course, it didn't play out, but more often than not, I'm happy to go with that because it keeps me in the trade in an area like this, in an area like this, in an area like this. That's why, of course, on the last resulting drive, it's not going to work out. That's why I'm never going to catch the ultimate high or the ultimate low. But do you need to catch the ultimate high or the ultimate low to make money as a trader? No, that's only for moon boys and doom boys who need like a one-trick pony in order to make money because they probably don't trust in their trading skills. Just trading the overall trend on the weekly has been phenomenally successful. Looking at the first weekly downtrend right on over here, do you sell 20,000? No. But you do sell, 13,500, 14,000, good enough, right? For the next year and a half. Well, same thing right here. We do have a downtrend once again on the weekly. Just like right on over here, we get our first uptrend on the weekly. I didn't buy at the actual low at 3,100. In fact, I was bearish down here, as I always will be until we change around the ultimate trend on the dominant time frame. So it wasn't until I didn't buy into Bitcoin until we got back above this high right here, which was 3,900. So, a lot of people were laughing at me, during this time right here. But as time goes on, that's why, I stick with these sort of strategies. They keep you in the trade. And more importantly, you can afford a little bit of a loss or afford to be wrong right here. If you're looking for something like this on the other side, that's exactly what I want to be talking about. So again, this channel is not about crystal ball, and it's not about predicting the future. There's no such, I can't predict the fucking future. I know how to trade, and I know how to use a technical analysis edge and plus risk management in order to come out with a statistical probability that will, make me a net winner over time. But predicting the future is something that I haven't really seen anyone be able to accurately do over a long period of time. Sometimes I will feel very strongly about a move, but there's always an air of fuckery, of just weird things that can happen. So it's, nothing's ever 100%, right? Nothing's ever 100%, but there are situations that merit, risk on. So that's really who I'm speaking to on a channel like this. I'll let the people who probably aren't even trading talk about those sorts of scenarios, because it doesn't even matter if you're a trader. Technically you're not, you shouldn't really care if things are up or down, on a day-to-day basis or even a long-term basis as a trader. It's just, you fucking trade, man. Me being a Bitcoin fan, I suppose, is maybe the best way to say that. I'd rather it go up than down. It's also a lot easier to trade an upwards market, but hey man, you got to cultivate those skills, because it's not always gonna be an upwards market. Anyways, looking at the daily right here, we do see a confirmed cross the red 10 symbol below the yellow 21. Very nasty. Last time that we had this was on the breakdown from 10.3 to where we are, where we got to about a month ago at 7.374. Yes, it does. It does chop around in these long form consolidations, but this area right here, very reminiscent of this area right here. Whenever you see that curling over action, it's distribution. It's fucking distribution. It's a rolling hills of distribution. Over here things were orderly, and we were kind of having a phase shift, right? And that's going to take its time. And so naturally, you should be a little more apprehensive of these crosses. Although, to be fair, they actually, these are actually decent trades here. Telling you to sell at around 10.8, get a move down to about 9.2. That's a $1,500 move right there. Tells you to long right here. You technically do get about almost $1,000 move from 11.3 to 12, what is this, 12.2 tick, 12.150. So actually not bad, even though this one is, obviously not the best one. This guy right here tells you to sell right around 10.9, get all the way down to 9.5. Pretty simple. This guy right here, obviously a terrible one, but you can afford a terrible one, and especially if all those other ones are gonna, you're gonna trade properly. And of course, this is not financial advice. I'm not a financial advisor, but I'm just kind of sharing the way that I trade and the way that I kind of use these things. And to me, this area right here, very reminiscent of this area right here, where you just get that rolling over action. It's weakness, it's nasty, and while I do think that we're actually due for a bounce relatively soon, do I want to sell that bounce? Do I want to buy that bounce? I'd like to close shorts on that bounce and then come back and reassess is really what I'm saying. Because like I said, the most likely thing to happen over the next 4 to 6 months is a range here, and it's going to be really, really boring. It's going to be reminiscent of those more, slow times in cryptocurrency land. It's a big range, to be fair, $2,000, $3,000, but people want like the big trending move. So, I'd say it's time to be a range trader rather than a hodler or a doomsboy. What's like a good meme for the people who are like always bearish. It's the same thing as people who are always bullish, just bullshit. Anyways, I should mention on the daily that we actually do have, we have had multiple closes below the 200 exponential moving average. Again, it's coming in right around 8,700. So as long as we're closing below there, even on like a 4-hour closing basis, I wouldn't be looking for that BART move up, or I wouldn't be looking for like a move up into the 9,000s. However, if we do get above this region, I would be looking for a move to about 90.50 to 9100, and then we'll come back and reassess. Perhaps it gets extended to like 93, 94 after that. Test around the 200 simple. But as it stands right now, yes, momentum oscillators are quite beat up, and I don't really think that we have too much more downside here before a nice bounce. But we can very easily take out another 200, $300, and if you're over leveraged, that's going to be enough to likely liquidate you. Let's see, what else do we want to talk about? Let's put back on. Let's actually look at the simple moving averages right now, which. We are now opening and closing below the 50 simple. This is the green guy right here. And the 30 simple has been crossed to the downside of the yellow 21 exponential moving average. Both of these pretty big deals to me, actually. Now, what would be an even bigger deal to me is their slope. As with simple moving averages, I actually don't care about crosses as much as I would about like exponentials. I don't really care, like posturing isn't as important either, but I certainly do care about slopes, and the 30 simple being the most important when it comes to slope analysis. And like if we carry out another like 2-3 days below this level, we will get a negative slope on that, and we will actually have a pretty damn bearish overlay of the 10 simple trading below the 21, or well, it's also going to be the 20. Well, I wonder if the 20 simple is in this region. Is in this? Oh wow, the 20 simple is way up here. And if you're wondering why I'm looking at a Trilogy bands, because that's a 20 simple. You probably knew that though. Anyways, 30 simple, getting crossed by the 21, usually not a good sign either, but. A lot of people will play that, but does it initiate a lot of bot and algo sells? Maybe. It's still in the first day of its cross, so I'd like to see at least one open and close while that's happening. So yeah, overall, as long as we're below the 50 simple, which again is coming in right around that 85, 50-ish region, I don't really see anything more than like a short term, like a very, 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 very small bounce. If we get above there, even just tick above there, then yes, I'd extend that, likely up here towards about 88.50 to 89, 88.50 to 8900. Close a 4-hour dildo above anywhere above 8700, and I'd probably be looking for that to get extended to 9091 region. So man, that's goddamn, that's a mouthful right there. I understand that's this analysis must be just absolutely terrible for a lot of people to listen to who just want like, what do I do, long or short? Well. You have to think actually is what it comes down to. Let's see, let's go over here to the 12-hour. 12-hour has been pretty good recently. We do see 12-hour stows looking like they want to cross back up to the upside. Again, how much more downside do we have here? I don't feel like that much. So let's put back on these guys. Let's get rid of them. Okay, lovely. And I forgot to mention something about the daily. Oh man, apologies about this. We will be getting a death cross on the daily. The longer that we stay below 8,700, it is inevitable. It's just a matter of time. So 8,700 is a major inflection point on the market now. As long as we're below there, there is a legitimate chance that we actually do crash below, 8,000 and do initiate targets down into the low 6,000s, upper 5,000s. Because that one typically does, hold a lot of weight. I mean, not only that, but I do want to put the spotlight back on this as well, longer term. Take everything off except for the purple 200 exponential moving average and then the white 200 simple. So the 200 simple going to be less reactive than the exponential, just by the way that they're, just by the way that the math works. And looking at the cross of them, you can see a nice little interplay of them over a long period of time. When the purple, the more reactive, is above the 200 simple, and these are very high period moving averages. This is telling you to long during this consolidation. This is one of the reasons why I knew to hold on to my long, and getting a nice move on top of that, almost 3x from that region. Right on over here, it tells you to play things short, longer term. And, where's the next big sell at? The 200 simple multiple times gives, very, very generous in the way that plays out. And, this is a move from 10,000 basically down to 3,000. So pretty fucking hefty. And then same thing for the upside in the last cycle right here. And then same thing for the downside right on over here. So, it's telling us about the overall greater trend. The further that we go back in time, though, the less and less more efficacious it'll be, because you need a lot of time really like putting in the charts for these moving averages to make sense. So if you are looking at like the first years of history, it's probably not that helpful. More importantly to me, though, is the slope of the 200 simple. If we do start to flatten out and then get a negative slope, which is actually not going to happen like anytime, it's still going to take like a few weeks. Even if we do stay below like 9,400 for the next few weeks, it'd still take like another month or so, or maybe a month and a half. But we'd like to get some like right on over here, right? It takes its time, but the second that we get a negative slope, that's the next big sell, baby. So whenever they, there's the slopes of these guys is almost as important as a cross, or sorry, it's actually even more important, I'd say, because it gives you an insight into how efficacious these crosses can be. This one to the upside right here, telling you to hold the whole way through. Beautiful, fucking beautiful. And it's not until the 200 exponential moving average flattens out that we actually get a nice move down. Same thing to the upside right here, same thing to the downside right here, and same thing to the upside right here. So you can see how that works over time. So if we actually do, the longer that we do stay below the 200 simple, the more and more likely this does get a negative slope, and that's when likely disaster strikes, and we have a nice big move. I do want to check out historical volatility percentile on the 12-hour again. Let's see. Yeah, it's really, really low. So we're seeing 12-hour, 4-hour, hourly all at snake eyes right now. We're probably looking at a move around the time that CME is open, which is going to be about around 5 p.m. Eastern time later today, Sunday. So keep an eye out for that. Could it happen before? Could it happen after? Yes, of course, but it's within the realm of reason that it's very, very likely, coupled with the fact that we're looking at open interest getting absolutely, not like astronomical, but getting very high, well above 1 billion, 1.1 billion is a big deal. That's when we get our multi-$1,000 moves, typically speaking. Anyways, let's see. Let's put on all these babies. Okay, 1, 2, 3, 4, 5. Great. Excellent. Beautiful. I should say on the 12-hour, Jewel still kind of telling you to hold this short, although anywhere in this region right here, we typically don't stay there for too long. Only the only times that we've really even gotten down there are during like really, 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 really hefty moves to the downside, which I don't really feel like we're doing right now. I feel like we're ranging, and we're hitting the bottom side of the range relatively soon, whether it be like 8,200, whether it be 8,000, whether it be 8,300. It's all the same to me, really. Let's see. I remember that there was a buy signal on the 2-hour Jewel yesterday. Yeah, there was right here. Let's see how that one played out. I want to follow up on this one. So it told you to buy right here, right around 84. Let's take. Okay, so we had a wick down to 84.20. We got up on the next move to 85.50. So $150. I mean, usually you're gonna get more than that. Is that the does this one have more oomph on it? Well, maybe. We did actually break that trend line there. I'm not so sure. I'm not so sure. It doesn't look that strong to me, though. I would say that. And the fact is that we don't really have it on a time frame that I think really starts to make it hold weight. Although, well, the 4 hour is going to be setting up. The 4 hour will set it. The 4 hour is not having it right now, but the 4 hour will set up in the next couple of days. So there likely will be a good long opportunity in the next couple of days. But I don't think we've seen it just yet. It's possible that we saw it right here, but I think it's more likely that we have one move down, then the big bounce. Although volatility would disagree with me, so fair enough. Can I be wrong on that? Yes, absolutely. I mean, it could be today. We might have already seen the low at 83.50. I mean, that's that is low $8,000 region, which we've been speaking about for quite some time. So, would it be reasonable to look at it as such? Actually, yeah. Let's see. What else do we want to look at? Okay, we've beaten all these horses to death. I do want to take a look at a couple of time frames that I very rarely look at. We already looked at the weekly. Let's look at the bi-weekly right here, and check this out. Bi-weekly has been pretty good. It would suggest that we actually do bounce off this region, the 21, as it has been a pretty damn good, overall feeling of where we are in the market cycle. However, there's one that's a little bit better than this, and that would be, funnily enough, that's actually the 3-week. which, does show that the 21 is right here, right around about 7,900, so the low side of the range. So again, high probability of bounce between like what, I think what we just saw on the 2-week, on the bi-weekly was 8350, 8300, 8350, of which we've kind of already hit. And then, the 3-week showing right around 79. So anywhere within that region is probably good enough. The 3-week does look like it wants to come a little bit further down. 3-week Stokes are pretty nosedivey right here. Anytime that we've gotten below the bullish control zone, we stay below the bullish control zone for months at a time, actually. 3-week RSI also getting rejected. It tells me that we'd likely come back down and at the very least test the neutral zone. So I do still put the probability of the downside, of another move to the downside a little bit higher, but the edges are tight here. I want to make that very, very clear. I don't think that we're breaking down here. I mean, we certainly could. It's just, I'd want to see like a weekly close below maybe like 7,800, we'll call it. And then I could get very bearish for a move down, into like the low 6,000s, upper 5,000s once again. All right. What else do I want to look at? Is there something? I feel like I'm missing some. Probably I'm missing some. Let's go check out expected moves. Let's see. Expected moves actually have flattened out. So expected moves are saying that we actually do likely bounce. Top side of the first deviation would be around 87. Or sorry, no, 86. So, if we do move above that, that's obviously going to be back above the 85.50ish region I was looking at on the lower time frames. I'd actually be looking for a move back up here. I don't know why there's an alert, but I'd actually be looking for a move to the second standard deviation. But when we get this tight, it usually, when we actually do have a move, we're not going to operate within the first deviation. We're gonna hit extremes to the second or third, which, remember, those are like less than 5% or 1% respectively. But even though they are low percentage plays, well, these are the times to expect lower percentage plays when you see volatility crushed, when you see open interest very high, when you see structure suggesting the same sort of thing as well. So all that does matter, in my opinion. Let's go check out a lot of the fundamentals here. So I'll go through the Bitcoin VWAP ratio. We've spoken about this quite a bit. I will pan this one out, and for whatever reason, my voice is failing me now. My glasses. So there's a lot of things to be aware of here. I'll go through the full rigmarole. As I typically do on the Sundays, and there's a lot of things to be aware of with this. The three moving averages on the VWAP ratio right here, not their relationship to each other. First things first, where you see my cursor running through, run a regression line through there in your mind's eye. Whenever we see these guys generally above, we're generally bullish. When you see them below, we're generally bearish. But we can take this multiple steps further, which we'll do right now. Then we want to see the relationship between the blue, between the purple, between the pink. The blue being the most reactive, the purple being middle, and then pink being least reactive. And if we see all of those guys on the same side, strong trend in that direction. And then the divergence between those guys, it speaks to the strength of that trend in general. So when we have the most reactive above the middle reactive, above the least reactive, that all above the regression line, that's your bull market. So that's what we saw here from about 2016 to 2018. That's what we saw right here on this major move. That's what we saw right here on this major move. And more recently, we actually saw it a little bit right here on the move up to about 14,000. And then same thing for the downside. And I've actually taken this one step further and noticed that even just getting the purple and the pink below the regression line that I was speaking about earlier has always produced, literally always in Bitcoin's history produced actually major massive moves to the downside. We have this example right here from 20,000 to 6,000, so about a 70% move to the downside. We have this example right here on this bull trap from whatever this price point is to the low, which was about another 70% move to the downside. We have this example right here from the high to the low of this first major move, another 70% move to the downside, and we'll actually measure these ones out. And then this first one right in over here, which we actually get the blue below these guys as well, and that's a very, very nasty one. So it's actually like 94%. So we can actually look at these guys just really quickly here. I'll measure it out and then kind of suggest what we'd maybe be looking at. So this guy to this guy, 70% move to the downside, as you can see. Then we have the next example right here on this bull trap, which was another 76% move to the downside. Then we had this guy right here, 71.5% move to the downside. Then we had this guy right here, which was a 76% move to the downside. And then this one's kind of like the unfair one. it's 94%. I'm not necessarily certain that we're going to do something like that, but to put in perspective, we have had from top to the current bottom about 47.25% moves to the downside. It's not really in line with the ones that we've seen in the past. So is there a legitimate possibility that we do actually break through this $8,000 barrier or $7,800 barrier, whatever you want to call it, and move down in this region? Actually, yes. And let's see what the percentage, would look like if we were to shave off, a reason, like something that is within line of the average, within line of the average that we've seen. So 70% down would put us somewhere actually right around $4,000, 4,100, which funnily enough, you can imagine that the blue 3/7 cent exponential moving average is actually going to be around that price point longer term. Assuming that this doesn't happen like today, which probably doesn't, and probably doesn't even happen at all. But if it were to happen, we could imagine that would be somewhere in this region right here at that point in time. So yeah, the 377 in traditional markets is incredibly powerful, incredibly important. So if we did come down there, I'd be a massive buyer of there, and that would basically look like a double bottom. And we'd probably do something like gold where we work our way back up over that, and that would actually be quite healthy over a long period of time. It would technically be a slightly higher low, and that's the thing, is we're dealing with bigger numbers here, so trends does matter, of course, but it doesn't really help the people who are like, the long-term trend is up, but we can go down about $6,000 from here, $4,000 from here, which is like 50% drop, which not the best thing. Speaking of 50% drops, we can take this one step further and discuss what we looked at yesterday on the favorites tab. Where is this? Where are you? Beautiful bitch, you. Yeah, the hash ribbons is what I want to talk about. So what you're looking at in the bottom pane here is the hash ribbons, and we are in danger of having a bearish cross of these guys. It got averted the other night. It was actually below the other night, kind of like what we saw right here, but it got averted at the last second, and it is a dangerous situation because while we haven't done it, and while it really needs like a few days to really get like that divergence here that matters, otherwise it's usually like a one-off or sometimes even a major low. The last time that we got a signal like this was, 53% drop, right? I mean, if we had a 53% drop from a signal like right here, that'd probably put us, basically at that target. This one would be like mid 4,000 essentially. So reasonable. This is a little bit experimental though, just because like we do have an example right here on this one. This does drive from top to bottom about a 40% correction, and then this one right here, not really telling you anything. I mean, it's basically a low actually. And this guy right here also giving you a signal right before the breakdown. So it's telling you that a low is kind of near. But this one right here, again, this is a 57% drop down right there. And then before that, there's we have this example right here, which actually called a low. So it works both ways, but it does tell you that a major inflection point on the market is coming, whether it be another 50% move or an actual bottom being formed relatively soon. That's the art of it, I suppose. So yeah. Let's get that off and let's go back on over here. Let's go look at the network momentum as well. Now I don't think that this is as important, but you can see that we're kind of double bottoming on the network, or potentially double bottoming. We aren't really curling up just yet. I'd like to see this curl back up and get back above this form little hump right here, and then I'll expect a signature to what we saw right here on the lows coming out of this switch up from bear to bull. Same thing right here, same thing right here. All of them kind of operate in the same vicinity, but that would also entail that we should probably start to curl up right now. Now there is certainly certainly some backlash on a statement like that, just because it's not, I'm not certain how efficacious this is, just because there's going to be more custodians in this market as the market matures. You see BACT, you see what's the other one, CMEs. You see more and more like bigger names want to get in this game, and they're going to be acting as basically custodians, which would naturally slow down the network momentum because they're going to be big hodlers essentially. We can go look at this as well. I think the Bitcoin RVT ratio, which is the realized value I believe it's the realized value transaction. Let me just realized value to transaction volume ratio. Yes, exactly. In the bottom brown oscillator right here. This one also suggestive that we're likely ranging. And we probably found around the low side of the range in this low $8,000 region. This area, historically speaking, has always been associated with lows. We're talking about 2012 low right here. We're talking about 2014 low right here. We're talking about 2018 low right here. And yes, we didn't get down into that region exactly, but again, suggesting that we're around that. We're close enough is close enough. And then looking at the Bitcoin difficulty ribbon, anytime that this expands, we're typically in bull markets. So you see right here, all throughout 2016 to 2018. You see right here all the way through. You see right here at the beginning of the genesis, and then when they contract, that's your contraction phases, your bear markets. As I say, so this area right here, 2014, and then more recently 2018, and right now we're expanding. So yes, you can have some downside on this when you expand, of course, no doubt about that. But it would suggest that you probably should be looking for, like a market cycle low relatively soon, rather than expecting it to reverse right there. I'm not so, again, it's, you go with it until it tells you otherwise, essentially. Or at least that's the way that I'd be, that's the way that I'd be kind of, thinking about it. Anyway, let's go check out the, let me just make sure that everything's going well over here. Okay, cool. We're good. All right, beautiful. Let's go check out the other top shitcoins. Or actually, first, before we do that, let's look at Bitcoin dominance. I believe it was bouncing last time we said, and I think it's likely to continue to bounce. Let's see. I actually haven't looked at it in a while. Is this likely to bounce, or is this likely to break down? I think it's likely to bounce here. Yeah, I'd be looking for this to pop back up to like 69, a little bit above 69, like 69.15 region. So alts probably are putting in tops around this region, and probably going to come back down to the low side, or the middle to low side of the ranges, on average. Not every alt, but just as like a general picture of fitness, probably going to be around that. So let's go check out Cardano, see what he's doing versus, and this is only for the Bitcoin pairings. Yeah, you can see that we're at the top side of the range right now. We did hit the 520 target. Nice, not bad. So, I'd probably be looking for it to come back down to like 490, 480-ish region and fill out this area. I actually do think that longer term, this is starting to be more and more better, more and more healthy, just forming a nice trading range down here without having any major meltdowns. That's actually okay long term. That's constructive long term. But could I be wrong on this? Yes, I certainly could be wrong on this. If we close the daily to low above, let's call it like 530, then yeah, I'd look for this to pull all the way up to like 600, not 600, but 650 to 640-ish region up here. But for right now, I think that we put in more time in this region, and then later on give a legitimate try to the upside as things flatten out. I want to see the 200 simple get a flat slope there. What else do we want to look at? Let's look at total market cap. I'm curious how that one's shaping up as well. Let's see, what are we looking like right here? Actually, I think we just got to, we're about 2 days away. Yeah, we're about 2 days away from getting a death cross on the daily total market cap. And this it hasn't been perfect. That's the problem with it. But getting a one-off like this where you pop back up and then round out back to the downside, usually those get played pretty hard. So if we do spend another couple days below like the $230, we're at 223 billion. I'm showing as long as we're below 230 billion, those will inevitably cross. But it's gonna take another 2 to 3 days, I'd say. And if that does happen, I would look for us to hit the bottom side of the range somewhere down here at like the low 200s. Okay, what else do we want to look at? Let's look at Mrs. Litecoin and Mr. Buterol, perhaps. See what they're doing. What are you doing, you beautiful bitches, you? Okay, so Mr. Buterol did hit our target the other day of 177. Nicely done, Mr. Buterol. And looking to me that, I don't see this as good here. We were printing an ascending triangle. It was good up until the breakdown right here, rejection and breakdown, and now we're using that as resistance. So as long as this one's below 184, I play it to the downside and look for this to actually come down likely towards here, 174, 175 region. Let's see, momentum oscillator is still angled to the downside. Daily Stokes down, nosediving. Daily RSI rejected and looks like it wants to go into the bearish control zone. Don't like that one. Weekly is, did we take out last week's low? Yes, indeed we are, and we're getting rejected by the 21 once again. I mean, it's again, the dominant trend here is down. the trend is fucking down. You know, it's just it's the most simple thing. It's not very sexy, but it gets the job done. Mrs. Litecoin's the one that makes me think that we actually could still maybe bounce here. However, if we close the weekly below the 200 simple, which is 58.5, which we're actually below right now by about 35 cents. So it's, you know, it's certainly manageable, but hey, I'd still wait for the weekly close again later tonight at 7 p.m. Eastern time. If we do close below the 200 simple, I would be looking for this to come all the way back down to like $51, $52 right here, and then and probably lower over time. But for right now, you know, fading this move would be very bad. If we close above the 200 simple, I wouldn't be bearish or bullish on it. I'd just want to watch because it looks fucking nasty. If we close above the 200 exponential moving average, which is $62, then I'd be bullish on it and looking for a move up to about $70. But for right now, you know, we're closer to the downside and pressure is down. Let's see. Do we want to look at Ripple? Yeah, Ripple's kind of what I'm afraid that most of the market's going to do. You know, all the market kind of had this, like, you know, this anemic rally right here, and then Ripple just gets rejected back down to the below side of the range, essentially. I don't think that, it doesn't really look to me like Ripple's going to like break down here to like 23.5, 24 cents. But if we close below the 200 exponential moving average, which is, where is the 200 exponential? Actually where we are right now, about 26 cents. If we do actually close below there on a weekly closing basis, then yeah, I'd look for a move down there. But for now, probably more likely to maybe bounce back up to like 27 cents. Daily doesn't look strong or anything like that, don't get me wrong. But I don't know if we have like, if we can sustain this downside like right now before playing out a little bit of a bounce. Maybe, you know, if Bitcoin does come down, I would certainly look for Ripple to come down to like 25 cents. Yes. But yeah, probably just easier to watch Bitcoin right now. Longer term, let's just look at like the general altcoins. Monero getting rejected by the 200 exponential moving average right here. Stellar getting rejected by the 200 exponential moving average right here as well. EOS looks like it might actually pull through, but hey, the trend is down again, lower lows and lower highs. But looks like it actually has a chance. Then again, if the rest of the market goes down, this one very likely to go with it. Neo, still downtrending on a weekly. You know, I don't know what people are getting excited for here. I believe I believe that we called a top somewhere in this region the other day, like 14 and a quarter maybe. So, or sorry, 13, probably 14 is what I said, and we got up to like 13 and a half or whatever it is. Looks to me like it wants to come back down to 11 and 10 cents and such. I mean, could the weekly be okay? I would be less, I'd be less encouraged on this one. We actually do have a higher low in place, so fair enough. What about Tron? What's Tron doing? Getting rejected by the 20. Looks like it wants to come back down to 0.017. Bcash, what's it doing? Same thing. Looks like it wants to come back down to low side of the range, 226.5. Zcash literally doesn't even know how to rally. So there you go. There's your greatest fear on the market. So I'm gonna wrap this bitch up. Lower time frames, it's actually starting to look more and more like we don't get this BART here, and we actually move a little bit lower first, and then maybe and then probably play out a nice little move to the upside. You know, where are targets for this move to the downside? I don't really have like a specific area. It's really like between 81, let's call it like 8250 and 8100ish region, maybe as low as 7900 down here to the 377, and maybe as high as like 8300, something like that. And then I would be looking for a bounce. You know, I think that it's really tight margins here. If you are trying to short this one, you know, the time to short was either on this break right here, or more appropriately on this break right here, or on the retest, or on any of these retests actually would have been fine as well. This one, it's like worse. It's not going to take too much to get it to just get like an algo run bounce, just because it's like you're just building up divergences everywhere, and you're seeing all the momentum also starting to turn back up. So it just creates a cascade of effects. But for right now, I suppose what I can kind of leave you off with is, as long as we're below 85.50, I do think that we see a little bit lower before playing out like a decent bounce. Decent bounce being like $400-$500, maybe more than that. Anyways, that's going to do it for right now. I do want to wish you well on this glorious Sunday, a very dark and despaired Sunday, of which I'm dealing with a lot of my own problems, just not really problems, but like busyness, which can be a little bit annoying at times. I want to I want to again say that's I want to again say massive thank you for the for the chat, Jacob Canfield. Really enjoy that, so definitely go check it out on Cointelegraph. Like I said, it'll be links in the description of this video. He seemed like a really legit guy and like really wholesome and everything, and I think that's damn cool. I know that there's maybe some controversy around him, but after speaking with him and after kind of like hearing his side, I can totally understand where things might get misheard, where things people might kind of draw conclusions when it's it might be the opposite, something like that. So I'd say go into it with an open ear and an open mind, because he did have a lot of valuable things to say, and more or less we have a very similar trading style to begin with. So it's not like we're gonna disagree on too much anyways. So that's gonna do it for right now. Again, pleasure speaking with you on this beautiful Sunday. Take care, and until next time.